It's midday, and this is Market Day Report. Let's take a quick run through all of the markets that we cover here on the row crop side. We'll start with rough rice, and we're in mixed territory here. This is a market that's been higher the last two sessions, but again, mixed territory right now. It's also led the row crops. All of the row crops coming into this week, it was number one, followed by cotton at number two and wheat number three. Things have changed since then. Here's oats. They were higher yesterday, mixed territory today. And finally over to canola, and canola futures continue to move higher. Again, this has been a pretty hot market here in 2026. Yeah, 2026. Sometimes it takes me to the end of the year to remember what year we're in, right? Here's the cotton market, higher for the last three. Now, could we make it four sessions? We're up a half penny at 81.62. Over to the wheat, and hard red is now one tick higher, 763 3/4. The wheat market, Chicago, 3.5 lower, 702 1/4, but again, back up above 7. Here's soybeans, and we're trading the bean market up 4 3/4 on new crop, 1243 3/4, and then corn, the December contract at 486 1/2. It's up 1 3/4. We've got Nick Paumen with us. Nick is with CHS Hedging. Nick, I couldn't remember what year it is. So it's 2026, but is it too soon to start thinking 2027?
No, not at all. I mean, with the rally we've had in the front-loaded months here, some of your deferred contract, we've also seen some pretty nice rallies. You got D's 27 that traded within just over $5 futures. You got NOV 27 that was within a nickel of $12 futures. So it's definitely one, I think, starting to layer in some sales there is good. You always hope your first sale is your worst sale. So starting at these levels isn't the worst thing in my opinion. So not only the new crop 27, but some of the months before that, like March, May, July of 27 for corn and beans too, are worth looking at with the rally we've had. So it's important not to get so nearsighted with marketing grain.
Okay, obviously we're trading geopolitics. We're trading weather. How do you navigate through some of this?
Yeah, I mean, both things combined add some volatility, right? I mean, the funds have a reason to buy. You got outside markets like crude that's extremely strong here today, up over $5 with WTI, so that spills over into the grains. But the dryness and the heat, right? We kind of cooled down a little bit here this week in a lot of areas, but we're going to crank right back up. So we went through a lot of pollination or the start of pollination, hot and dry, and that looks like it's going to continue not only through corn pollination, but into pod filling, key pod filling time for beans. So definitely a reason to watch. I mean, the next 7 days, there's a lot of counties, high producing corn and bean counties that are going to see less than 20% of normal rain, and plenty of counties seeing less than 10% of normal rain. So the weather is definitely a concern factor right now.
Yeah, great insight there as always. Nick, thanks for coming in. Nick Paumen is with CHS Hedging. All right, we'll take a break. We'll come back and look at a couple of markets that have been pretty volatile as of late. It's right around the corner on Market Day Report.